Hey guys, my name is Kenny and welcome back to the next multibagger. In this episode, we're going to be taking a deep dive into UiPath, ticker symbol PATH. Now, UiPath is a very exciting company that recently went on the public market about a month ago, and it saw a lot of positive optimism as the stock traded over 23% higher than its original listing price of around 56 apiece, where it traded up to around $69. Now, the stock is currently trading around $66 at the time of this recording, and we're going to be skimming over their investor presentation and be giving you a quick breakdown of what UiPath is all about. Now, UiPath is one of the fastest growing software companies ever and has one of the best financial metrics within the SaaS industry. They're a company on a mission to automate all forms of mundane tasks within the modern enterprise. The company has a tremendous amount of potential as AI plays a bigger role in the future of work. Now, automation is one of the fastest growing industries in which UiPath is currently the leader with 1% penetration, which is a very still small part of the market. Now, this analysis is going to be taking a deeper dive into UiPath, the history of automation, and major highlights from the recent earnings report. So without further ado, don't forget to smash that like button for the YouTube algorithm, and don't forget to drop it 5 stars on Apple Podcasts or Spotify or wherever you're listening to this. Without further ado, let's dive right into it. Now, UiPath develops software that helps organizations discover and build automation tools across their organization. Their platform leverages the power of artificial intelligence and computer vision to enable software bots to perform a vast array of actions as a human would. Now, UiPath fits all the criteria for a high-quality SaaS company. First, on the financial aspect, the company is growing revenues at over 65% year over year, high gross margins at 88%, free cash flow and operating margins have improved and grown over 100% over the last year. They have a dollar-based net retention rate of 145%, which is one of the highest within the SaaS industry. Now, UiPath is currently ranked number 1, a category leader amongst all the research advisory firms like Gartner on robotic process automation, also known as RPA. Now, they have captured a significant amount of market share within a short period of time. Their total addressable market is over $60 billion when you consider the vast potential opportunities available as companies aim to streamline and automate inefficient processes. Now, the company faces some threats from emerging cloud-native disruptors that are targeting specific vertical niches within automation. However, UiPath has bolstered its hybrid cloud and AI offerings to ensure that they stay ahead of the competition. Now, the current valuation reflects this vast potential, as they sport a very lofty valuation. So, let's dive into more of what the problem is. So, we've heard that the cliche that robots will take over our jobs in the future. And we know that this is not entirely possible, but every day we see that with advancement of artificial intelligence, there are more and more tasks capable of being handled by intelligent machines. Now, over the last decade, major corporations have built up many bureaucratic processes. And as a result, today's enterprise is filled up with many repetitive and mundane tasks for employees. Now, some examples, not limited to, including logging into multiple applications, extracting information from documents, moving folders, filling in forms, updating information fields and databases, and the list really goes on. And these are all essentially many rule-based tasks. As a result, there's been around a 50% decline in productivity and hours lost. Now, all these data points combine with the fact that many modern-day workers are getting more and more unproductive within the workplace. Now, the robotic process automation solution builds on their initial problem of productivity and an increase of mundane tasks. The solution to many of this is inefficient processes was to hire consultants and eventually build RPA robotic tools to automate certain tasks. Now, this solution led to companies like UiPath, which develop RPA solutions to automate tasks by emulating human behavior on computers. So what's literally happening is bots move the mouse, clicks on screens, and access systems and type on keyboards virtually to complete tasks as humans would do. So let's first talk about the end-to-end platform uniquely positioned for today's complex business problems. So let's talk about the UI automation platform. Now they have a flexible deployment model for both automation cloud, on the hybrid, on-prem, or in the public and private cloud. They're able to build, manage, engage, and discover. Now let's look closely at the company's product line. As discussed, UiPath develops software that helps organizations discover and build automation tools across the organization. Now they have three major RPA software categories. They have UiPath Studio, which is an easy-to-use drag and drop platform designed for RPA developers to build complex solutions. UiPath Robots, which are bots or software robots built in Studio, which imitate human behavior to execute processes and scripts. And UiPath Orchestrator. This is the coordinator that tracks and logs the robot's activity to make sure the bots are working properly. Now, built into the UI platform, they have automation and AI computer vision. It's an accurate and robust emulation of human interaction, reliably adapts to changing on-screen presentation, and computer vision enables our software robots by automatically virtual any A or UI. Now, the exciting thing about UiPath is that they have multiple vectors for future growth. Now, they're able to land new customers using a breadth of products platform. They can accelerate the flywheel to drive customer expansion. They can launch new products and develop new go-to-market alliances, foster and grow our communities and continue to invest in their partners, and opportunistically pursue M&A. Now, all these different drivers help build into this flywheel where they're able to govern and measure and continuously build, manage, engage, and discover on their platform, be able to get better insights and have better automation. Now, as we can see, they have a very entrepreneurial and experienced team, as Daniel Dines is a co-founder and CEO with past experiences at Microsoft. And we can go down the list and we can see that they have all had very notable experiences working in high profile companies such as GE, Microsoft, Dropbox, and the list goes on. So, number 2, high customer ROI, ubiquity of use cases, and proven land and expand commercial model. So now we're taking a look at the automation journey, which drives ongoing expansion opportunity. We can see that on the left-hand side, so we're looking at a graph with the left-hand y-axis being value, and then the bottom x-axis being time. Now, at the very start is single department and targeted use cases, which is essentially just a proof of concept. But as time continues to go on, there's more value being added. We can see that use case and department expansion leads into full platform adoption, which in turn equates to enterprise-wide development, which is continuing to build on the flywheel. And this turns into fully automated enterprise. So now we're taking a look at the customer ARR expansion case studies. Now we can see that they have many different use cases, from being global pharmaceuticals and leading global logistics, Canadian public sectors, and leading automotive manufacturers. Across the board, they've seen multiples in increases over their adoption and over their revenue generation. We can see that For global pharmaceutical companies, they've seen rapid adoption of citizen developers, driving vision of fully automated enterprise. As we go down the board, we can see there's been dramatic increases in the cost savings, and there's been a huge value add for a lot of these customers. So next, we're taking a look at another use case ROI example, which is intended software robot. Before, it was a 100% human effort with 4 full-time employees processing 5,300 claims per month. However, after, it's 20% human effort and 80% robot, with 4 full-time employees with 4 robots processing 27,000 claims per month. So that's over a 5-time increase in productivity. Next, 3. Speed of innovation, depth of technology, and breadth of ecosystem drive market leadership. So let's talk about the importance of technology in business partner ecosystem. Now, a core element of UiPath execution and market strategy involves utilizing technology in business partners. Number 1, business partners. A major catalyst for UiPath's rapid growth is its strong partnerships with consulting firms. Now, traditionally, consulting firms primarily help big corporations with identifying process automation by outsourcing opportunities as part of their engagement. So we can think of firms like McKinsey or Deloitte who conduct organizational assessments to identify processes and strategies to optimize efficiency. Now, a result of key similarities between UiPath's RPA goal and consulting firms' objectives is that UiPath has gained tremendous success by utilizing these channels partners who help sell UiPath's products to big Fortune 500 companies. Another reason for the success is that these business partners, consulting firms, already have strong relationships with the Fortune 500s, so the sales motion is much for UiPath's product to penetrate them, and secondly, the consultants themselves have found UiPath's product to be helpful during their engagements. Hence, it's a win-win for both parties. 2 is technology partners. Now, since UiPath's product must penetrate multiple applications and systems, they utilize API integrations and connectors to penetrate other products. As a result, it's integral that UiPath has a strong relationship and interpolate software amongst many technology platforms. And this system has become increasingly important as an organization makes more mergers and acquisitions, as they need to merge different legacy systems, and UiPath makes that more possible. We can see here that they have many different technology partners with very notable companies such as Adobe, AWS, Google Cloud, Microsoft, and some of their business partners, which include some of the biggest auditing firms as well as consulting companies like EY, PwC, Deloitte, and the list goes on. Now, number 4, growth at scale, strong unit economics, and operating rigor. So we can see that their business model, they manage and measure their business based on ARR, or annual recurring revenue. And this is the revenue that recurs or happens every single year. Now, they focus on a subscription model, which is primarily billed annually. And they primarily have 1-year contracts. On top of this, their pricing is based on the number of robots and users. We can see that they have rapidly growing ARR. From 2020 all the way into 2022, they have 79% compound annual growth rate. So every single quarter, they've seen healthy growth, and it's been a consistent uptrend ever since the start of 2022 or 2020. Now, on top of this, they have very strong customer momentum. We can see that the total customers went from, in Q4 of 2021, of around 8,000 to Q1 of 2022 to about 8,500. They've seen very similar growth within scaling large customers and becoming C-suite priority. So, although they grew at 65% year over year in Q1 of 2022, their guidance suggests a 33% year-on-year growth at the high point. The company has emphasized that it is important to measure them based on ARR rather than the quarterly revenue. They mentioned that this is because there's many different factors at work when they recognize revenue for the quarter. Now, it can be lumpy, but ARR is a cleaner measure of their progress. Now, many investors would be hoping that UiPath is providing a conservative guidance, perhaps because they're new to the public market and this is their first quarterly result. And it's expected that they beat and raise those numbers in the next quarterly result. Now, as for the bottom line on the financial metrics, the gross margin is around 88%, which is one of the highest gross margins within the SaaS industry due to the nature of their license-based contracts, although it reduced to around 74% on a GAAP basis in the recent quarter. Now, as for the operating expenses, compared to the fiscal year of 2020, they've improved their bottom line margins and have shown signs of operating leverage both on a GAAP and non-GAAP measure. The biggest red flags are that the company is spending a significant amount on sales and marketing, which is around 111% of revenue, especially as of Q1 of 2022. They previously reduced spending on R&D, but are now increasing spending now, which is very important for the future. Now, as can be seen, their non-GAAP operating margin and cash flow margins have improved. The company burned around $380 million of free cash flow as of January 2020, but generated around $25 million in positive free cash flow in January 2021. As their most recent quarter, their non-GAAP free cash flow margin was around negative 9%, which is definitely manageable unless it gets out of hand. And it's very important to note that the company laid off some employees between 2019 and 2020, which helped offset a major cost since they benefited from their technology in-house. And impressively, they have a cash holding of around $1.9 billion, boosted by the IPO, and they currently have no debt. We can see their attractive land and expand model, which they have around 81 times the median ARR multiple for top 50 customers. So with that, we're just taking a look at their GAAP to non-GAAP reconciliation, but I just wanted to address some of the risk factors at this point, since we're about to wrap up the whole entire presentation. So, as for the risk factors, number one, they have an investor's dilemma. Now, UiPath successfully disrupted the industry in 2005 and became the market leader within the RPA space. However, as a result, they face the innovator's dilemma, which a new disrupted company could displace them if they don't keep up with future trends in RPA. The automation landscape is filled with many competitors and newer players that are API-first companies who offer similar benefits such that of UiPath, which is aimed at improving efficiency through automation. These upcoming companies believe that modern API integration is the best way forward compared to UiPath's graphical system. And the second one is the move into cloud away from legacy software systems. Now, the biggest theme of the last 5 to 7 years is that of digital transformation and the move to the cloud. The big risk is that majority of UiPath's successful products were built to work very well in a company with legacy systems like SAP, Oracle, and etc. They faced the long risk of losing clients moving to the cloud. And however, over the past few years, to mitigate this risk, UiPath has expanded their SaaS offerings to provide customers with multiple deployments. The important question going forward is how quickly UiPath can upsell their existing customers moving into the cloud to utilize their RPA cloud offerings. Also, investors should note that as UiPath's cloud product increase, the cost of revenue will continue to grow higher, putting pressure on margins. They currently have UiPath Cloud Edition on Microsoft Azure and Kubernetes, which is the core cloud solution, as they also utilize Snowflake for analytic offerings. Lastly, they made acquisitions within the space to strengthen their position. It is expected UiPath will make more partnerships and acquisitions in this area. And number 3 would be for competitors. Now, the industry has many different competitors. However, the strongest competitors for UiPath within this industry are Blue Prism and Automation Anywhere. Now, the company has lost market share to Automation Anywhere, and today, Microsoft and Automation Anywhere are the major competitors within the space that could challenge UiPath. Now, to also increase competitive pressure, Microsoft recently made its Power Automate desktop free to all users with Windows 10, essentially offering a good portion of UiPath's value for a cheaper price. Hence, this would pose pricing pressure for UiPath. However, these tools are very basic forms of RPA, so they don't have all the advanced AI and machine learning tools that can match UiPath. And secondly, UiPath has a more comprehensive product offering that covers advanced RPA areas with a full go-to-market strategy compared to Microsoft. Now, lastly, its upcoming vertical and niche players. Now, this potential risk is to monitor as there are upcoming niche RPA players, such as Olive AI for healthcare and process mining companies like Celonis. Some of these other companies, WorkFusion, Kofax, AntiWorks, who offer cloud-ready RPA, are lacking on the fact that they don't have strong terms of global reach and broad applicability compared to UiPath, which is already established within this market. There are other low-code platforms and drag-to-drop features such as Appian and Pega who are playing an important role within the low-code industry. All these upcoming product-led teams, starting at the bottom and targeting specific segments of the market, could potentially pose a threat to UiPath. However, as of right now, these are just potential disruptors that investors of UiPath will just want to watch closely. Now, as for the valuation, the valuation is extremely high. Many institutions have been reluctant to sell, and this type of company will never be cheap unless something material happens with the business. Now, the total enterprise value is $33 billion over 2020 estimates of around $855 million. That would put it at one of the most highly valued companies on the market. Now, the biggest risk to valuation is revenue deceleration based on the revenue guidance. I believe UiPath was conservative since this was the public earnings result, or the first public earnings result. However, if it turns out that UiPath reports revenue growth of around 30%, then the valuation deserves to take a big haircut. However, based on the vast potential that lies ahead, I believe that they have a good long-term trajectory. Now, to sum it all up, the future of work and jobs is going to have more automation than we have ever seen over the past 30 years. We can see this evident beyond the enterprise, even by going into McDonald's or your local grocery store like Walmart. UiPath will play an increasing role in automating the modern enterprise. Hence, in conclusion, there's 3 major points. First, the biggest value proposition that has led to the rise of UiPath in their ability to provide improved time savings, reduction of cost, massively integrated efficiencies, productivity, thereby leading to immediate ROI for organizations. This all accrues from benefits in automation. And as UiPath continues to roll out new cloud and AI products, their future potential and revenue drivers will get stronger. Secondly, UiPath is currently the market leader, according to Gartner, and this is pretty rare to win the admiration of all the global research and advisory firms. It speaks to the quality and their product offering. Now, combine this market leadership with the total addressable market and TAM, which shows that UiPath has the purest opportunity to capture a significant part of the $60 billion market. Lastly, the company has a well-diversified and robust customer base that cuts across multiple industries and sectors amongst the Fortune 500. The widespread universality of the product makes them have a great future potential. Now, my final words is that UiPath has historically had success in RPA, but the future for UiPath will involve using AI to power the next era of advanced automation of jobs. The biggest risk to this thesis is how well they'll be able to execute on their new AI cloud offerings and revenue deceleration. However, I would not bet against the revenue growth going back up with their new releases. Now, they have over $2 billion in cash ready for acquisitions, and it's very possible for them to see controlling a significant aspect of this industry for some time. I think that in general, many might not feel comfortable investing at this current valuation, so it would be one to put on your watch list. I do think UiPath has a very great growth opportunity moving forward, and it's definitely a stock that I'll be adding to my watch list and watching for any potential dips for me to get into. So I'm going to be following the UiPath story very closely over the next couple quarters, and hopefully there will be a great opportunity for me to buy in. So with that, guys, thanks for sticking around. I know this was a long video, but UiPath has a lot of different interesting aspects to the business, which I implore you to look into yourself and to make a valid decision. With that, guys, thanks as always for sticking around. Don't forget to smash that like button for the YouTube algorithm and leave me a 5 stars if you're listening to this on Apple Podcasts. With that, guys, I'll see you in the next episode, and let's go get that bag.